Today, our stock analysis will focus on Comcast, ticker CMCSA. Not only do they provide cable TV and broadband service, but they also offer a mobile service and they do own NBC Universal. Now, let's take a quick minute and look at their financials first. Starting off at the top with revenue, though they've been losing cable customers, but over the past 10 years, they still have grown revenue by nearly 80%. Then net income grown slightly more by almost 85% from 2014 through 2023. But an even better data point is earnings per share up more than 130% over the last 10 years and far outpacing their revenue and net income growth during the same time period. So, a very good data point there. Next, two of my favorite data points to always look at, first being dividends that I do want to see growing over time for a company, and Comcast clearly has achieved this with constant growth over the past 10 years and up nearly 160% from 45 cents to $1.16. Then share count, which I like seeing on the decline, and Comcast has clearly achieved this, going from 5.2 billion shares in 2014 to less than 4.2 billion shares in 2023. Then lastly, free cash flow, and Comcast clearly brings in cash with over 10 billion every year since 2017 and only slightly less than that for the 3 years prior. So this company definitely generates cash. Now let's jump down and perform a stock valuation. Here's the valuation set up for Comcast, and we will look at other scenarios in a moment. But first, up here in the top right, the net income CAGR of the last 10 years, 7%, while earnings per share CAGRed at 9.8%, helped by those share buybacks. Now, for this initial analysis, I am using a slightly lower short-term growth rate at 6.5% over the next 10 years with a 10% discount rate and using a 3% long-term growth rate. Now, I am taking a 75% margin of safety, and this is due to this long-term debt to free cash flow. You see, it's pretty high, 7.3. I like seeing under 3, and this company does generate quite a bit of free cash flow. So I do think this is rather high. And as I mentioned earlier, they are losing some cable customers as well. So I want to take a good margin of safety in. But still, intrinsic value coming out to $53.65. And with that 75% margin of safety, brings it up down to $40.24. Now, the stock is trading around $36 or so definitely under my margin of safety, and it is near its 52-week low. So based on this, it does look like a good buying opportunity. But let's look at a few other scenarios first. And the first one is we're going to increase the short-term growth rate. So if we look at the average of the net income CAGR and earnings per share CAGR over the last 10 years, the average is actually 8.4%. And this is what management is kind of implying on their earnings call, a high single-digit growth rate. So let's change our short-term growth rate to 8.4% and see how that impacts the valuation. So 8.4% short-term growth rate increases the intrinsic value to $62.31, and that same 75% margin of safety brings it down to $46.73. So definitely above where it's currently trading in that $36, $37 range. So again, definitely looking like a buying opportunity. But let's look at one other scenario first. Now, let's just say these first two growth rates, the 6.5 and this 8.4, are pretty bullish. And let's just look at a lower short-term growth rate, and we're going to drop it to 4% to see what that valuation looks like. So 4% short-term growth rate, intrinsic value drops to $44.04, and the margin of safety drops to $33.03. So margin of safety valuation slightly below where it's currently trading, but still looking like some good opportunity here. And we are using a pretty low growth rate at 4%. And again, the stock's currently trading near its 52-week low. So definitely looks like some buying opportunity here for Comcast. Not sure if I'm going to buy in at this moment. I'm going to look at a few things, but definitely a consideration at this point. But let's look at some other data points before we move on. And first is the PE ratio. We see under 10, 9.9. So definitely showing value opportunity based on the PE. We already looked at the long-term debt to free cash flow. It is rather high. That's why we took that 75% margin of safety. And then dividends, as we saw it during the financials, we see basically a 158% growth rate over the last 10 years. So I really like seeing that. Pretty nice dividend yield at the current stock price, so 3.3%. So if you want to collect some dividends, again, this is a good opportunity. Share count down just over 20%. Another great data sign or data point I like looking at is shares decreasing over time. And net profit margin. I like seeing over 10% over the last 10 years, slightly above 12%, 12.45 the last 3 years, slightly below that, 9.75, but still, definitely like these net profit margins Comcast provides. And one other data point I always like looking at, return on invested capital. I typically like seeing over 10%. We can see this slightly below that in that higher single digit range. We can see as low as 6%, as high as 8.4%. I like to see that a little higher, but still can't complain with a company like Comcast. Now, again, back to the valuation, definitely looks like a buying opportunity. Though if I do buy in, I don't think it's like a extremely a long-term hold, like 5 years. I probably hold this for maybe 1, 2 to 3 years until the valuation gets to what I think its intrinsic value in that probably $50 range. But definitely an opportunity and definitely something I'm going to be looking into probably over the next week or two and possibly taking a position in it. But let's move on and look at my portfolio's performance. Here's the portfolio's overall performance, and we will look at a few of the investments. First being Tesla, TSLA. I am down since buying in a few months ago, but still have a long-term positive outlook for the company. Next, NVIDIA, NVDA. They're just crushing it, and I bought this a few months ago as well when I released that video. Same thing for Alphabet, GOOGL. Though it was struggling earlier this year, but now you can see up 30%, so performing very nicely for me. And last one we'll look at is Snap-on, SNA. I've owned this now for several years and it was doing well, but over the past couple of quarters it has fallen off. So hopefully when inflation and interest rates moderate a little bit more, this will help improve their financials and thereby the stock price. Now, hope you enjoyed this video, got some useful information. If so, consider subscribing. Hope to see you next time. Thanks for watching.